out. Let's bring in Wes Bricker. He is PwC US and Mexico Assurance Leader and Vice Chair. He's joining us from Virginia. And Wes, what I want to talk to you about is if you're someone who wants to buy stock in these companies, and it's always tricky to read a financial report when they report these earnings, what should people really be on the lookout this time around for lack of a better term, bombs in these earnings reports that they should be especially aware of?
Well, thank you, Jolene. It's wonderful to be with you and with your audience. Your question is the right one. In these periods of time, in particular, the disclosures that companies make and the quality of information that they provide to the marketplace is even more important. And so one of the areas that I think is always useful for the marketplace to focus on is cash. Cash continues to be king. As the old management saying goes, cash is king, and liquidity disclosures can provide real insight into the cash on hand, the nature that is being used, and then also the nature of the operations on the revenue side, what's coming into the company, and what's going out on the cost structure side. So those are the areas, Julie, that the market participants are really focused on in Q2. Those are carryover lessons from Q1 in many ways.
Wes, would we be better served as investors if major companies didn't report every quarter, but if we had a slower reporting cycle?
Well, Adam, thanks for that question. The markets have a thirst for information. Information is what enables investors to make the decisions which are so important for them to make, especially in our system where investors have the ability to come into and out of positions not only on a daily basis but within a daily basis. And so an orderly flow of information is really important, Adam. Now, whether it's a quarterly basis for quarterly updates, whether it's more frequent information, some companies provide more frequent information through their websites, or whether it's longer. Some international companies have a longer interval, 6-month intervals, for example. Those are all important questions. But what I focus on is really the importance of companies communicating with their stakeholders, including investors, with a frequent and reliable flow of information so that the marketplace can really operate. I think that's what's important here.
Wes, Dan Roberts here. Since we're talking about earnings kind of in general during this time, I'm just curious how much you think there's a risk for some companies either reporting right now or even 3 months from now, whether there's a risk that some are going to use the pandemic as an excuse. And I caveat that, of course, this pandemic has affected so many different companies, but also we've seen some bankruptcy filings from companies that were not doing very well before the pandemic. And so they really can't blame the pandemic. I sort of think of, in the past, sometimes you see companies blame currency fluctuations for their disappointing earnings, or in the golf equipment space, you would see them blame weather. And to say, well, it was an unseasonably cold, spring and summer, so that hurt us. I just wonder if we'll see some pointing to the pandemic when really that's not a great excuse for them missing earnings expectations.
And really, to your point, this is a time for business leaders to focus on the quality of their operations. This is a time to not count on a return to the way things were, but to really organize and plan for a business in the circumstances in which we find ourselves, which is a very challenging period of time in which to operate a business. We're facing disruption on the supply side. We're facing disruption on the demand side. We're also facing an uneven recovery period with economic challenges. And so this really is a time to focus on the quality of a business operation and to structure it going forward so that a company can be successful. I do think that's also where good reporting comes into place so that companies can distinguish between short-term measures that they're taking to support the business, add cash where needed, to get short-term support, and distinguish that from the long-term viability of the business and potentially restructure the business change the nature of its distribution. For example, other examples as we talk with business leaders across the landscape, many business leaders have focused on their cost structure, but they're also focusing on their investment dollars, with a disproportionate number focused on digital and technology and the way that should come into their businesses to enable them to operate and to get through this pandemic and be successful on the other side.
Yeah, of course, Wes, that's sort of a privileged position, kind of following on Dan's point. Maybe some of those companies won't even have the opportunity, right, to pivot as they lose their market share during this time. But a quick question, Morgan Stanley was out with a note yesterday that found that the 170 companies in the S&P 500 that withdrew forward earnings guidance are paying a penalty. They're underperforming the full index by about 10.7 percentage points. So as much as you say, the market wants full, robust information, there's clearly something at stake, right? So from the management side of things, can't you see there being an argument that even if it's nebulous, even if it perhaps will be amended in the future, earnings guidance is sort of necessary for there to be investor confidence?
Well, I think communication with the marketplace is critical. That's critical if companies are accessing our public capital markets. That's also critical if our companies are accessing information, for example, from a bank loan or a government loan program. Information is what enables companies to get access to that information and then report back to their creditors, owners, and others who have a stake. So to your point, Melody, I do think having good transparency and erring on the side of clear information around the quality of the business, the nature of its operations, and whether the strategy is working or not is important today and will continue to be important today. It's a great point.
Wes, thank you so much for your perspective. Wes Bricker is PwC US and Mexico Assurance Leader and Vice Chair. Thanks again, Wes. Appreciate it.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.